How important is the ECB? We've talked so much about the U.S. Fed for years. Is the ECB the most important bank in the world right now?
Well, it is, and it's also really important for US markets. So the way ECB QE has been working is that basically they've been buying bonds from central banks like, the Bundesbank's been buying the bonds from a lot of UK-based investors, and basically the money has been recycled into the US fixed income market. So we now have a situation where the Eurozone entirely owns about $2.5 trillion of US fixed income. And obviously QE is going to be coming to an end in December. And at that point,
QE, the European version.
Yeah, exactly. At that point, this recycling may well come to an end. We already see at the margin, the exposure of Eurozone investors to US credit in particular beginning to tail off. So I think that will be a story. And the other big story in 2019 and 2020 is increasing divergence in interest rates in the US compared to, in particular, the Eurozone. This differential has never been higher and will get higher still.
You know the doomsayers that we had in the United States. They were out there suggesting that when our Federal Reserve, the Federal Reserve of the United States, ended quantitative easing, that the punch bowl was gone. The party was over. Get out of U.S. stocks. If you listen to them, you left a lot of money on the table. Absolutely. The equity markets have done very well since then. Can the European and global markets do well when the ECB pulls that punch bowl away?
If the Eurozone recovery goes up another gear, and also Japan continues recovering, and we have a reasonable transition through the whole Brexit process, which is obviously ongoing, then I think markets can obviously go higher. I mean, there are
a lot of ifs there, though, a lot of ifs.
A lot of ifs, but at the end of the day, I think so much comes back to growth. Now, you have relatively strong growth in the European economy. I think that will support particularly European equities. And the same story will be true in the US. I mean, we want to get interest rates back to some normal level. The US is heading out there first, but obviously Europe's trying to follow.
Support European equities is not Wall Street, Fleet Street speak for you can still make money buying European stocks.
Yes, you can. I'm not a stock picker.
Sure.
I'm not an equity analyst.
But Jeffries has a worldview. We know that. We get them on in the States.
No, absolutely. And I think one can still be very optimistic about the outlook for certain markets, dependent on growth in the global economy, particularly if you're focusing on Europe. If we have European growth surprising on the upside going forward since 2019, that obviously would be a big support for markets more generally. But at the moment, we are direction of travel is that the ECB successfully did a dovish taper last week. The markets have remained supported in general. We still have very low bond yields, and people want to still put their money to work.
Walking around London, the amount of construction is shocking. Even coming from the States. And when I look at $1 million plus for a one-bedroom small apartment in London, you can't help but wonder. Have things is the easy money policy of the past gotten too exuberant? I mean, are we a little bit irrational in Europe as we were in the States a number of years ago? Well, it seems incredible what's happening outside these windows.
Well, I mean, at the end of the day, central banks like the Bank of England, but also the European Central Bank, are increasingly look at macro-prudential policies to try and head off where they see problems emerging. And certainly housing is expensive in the UK, and it's particularly expensive in pockets of London. So, the Bank of England was trying to head that off by macro-pru, restricting
all
loans.
This construction and spending ahead of Brexit. Doesn't make you nervous at all?
Yes, absolutely. I mean, so we are not great bulls on where the UK economy is going to be going over the next 24 months. At the end of the day, obviously, the stock market in the UK is very different. It's very international, and obviously, in a hard Brexit scenario, sterling would fall, which again would support certain elements of the UK market. But at the end of the day, one can't really be optimistic about the UK economy. That's slowed and will remain a very slow growth economy.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.